Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 11th of August here in 2022. We're past the PPI, which is our Producer Price Index. We are also past the CPI. CPI is your Consumer Price Index. That was Wednesday. That was the big deal. We talked about the inflation number, and that was weaker than expected, or inflation, rate of inflation, weaker than expected. That played off into our thesis, or the plan from Tuesday, which was, and we're just 2 days later, but if inflation numbers, keep in mind inflation numbers at 8% is still, beyond 8%, still high, but they were weaker than expected. So the knee-jerk reaction was the Fed can pull back. The Fed does not have to pull forward on the rate hikes. So in that scenario, as strong as inflation is, it was weaker than expected. That meant that equities went up. That meant in large part the dollar on the other side of that equation. Dollar took our downside move, and everything else taking place in the bond market. And the bond market in today's session, at least, went down. So we're going to talk about those components. We're going to talk about some of the major sectors, and of course, today's reversal. Today might not look like a lot of activity took place in the equity futures, but it certainly did. If we take a look at the big picture, we continue to be in the spot that I like to refer to as, here in the S&P futures, the spot that we can go to the edge of the cliff, but not much beyond. Because in the event that the market does start to continue trading above this, we'll continue to see, most likely, additional bullish activity that would be hedging and short squeezing, and everything else would be on the defensive. That's the risk quotient, still the risk quotient, and the reward is a much larger downside path. We will be objective and make notes about this level as we go forward. And that same this much, but no much beyond in the Nasdaq, that's about the 13,500 level. Nothing particularly interesting or spectacular about that number, but just that it's the roughly midpoint of its 2022 halfway back, or the midpoint, just a little bit shy of that in the Nasdaq. And in the Dow mini futures, that is getting a little concerning on the upside. That's the 33,500. We see that it has, in that sense, come to its midpoint, roughly speaking, as well. It's actually a little bit above the midpoint in the Dow mini futures. And that Russell, that's one we had eyes on in today's session. That was 2,000. So that's Russell, that small cap index, 2,000. It did hit and exceed 2,000. That was our upside target. But it, bringing us back to the short term, turned back, as did the other markets. So we did see the market, the Russell small cap index, at least go up to that 2,000 level, pierce above it, and then violently, with a reversal and a continuation of sell side activity, down away from 2,000. So that would be a continued intraday level to watch. And as the market trades away from it, that does give opportunities on the short side. That is intraday. And then, of course, on a swing basis. Not much different on the S&P. That the risk is of a break. And I use the word risk only because markets don't typically take straight line movements. Even in a broad downtrend, and as we like to refer to bear market, markets don't just go straight down. They do swing, they take multiple days, then they retrace. They take another swing down, they retrace. There can be multiple days in one direction, but it doesn't tend to go much beyond a swing, and a swing might be a few days. This is a very large swing, and the risk is for, it'd be the same thing as talking here, that markets had risk to continue their upswings, but did not. Instead, they turned back down, making their reward, in a sense, the mean reversion. Mean reversion means lower if this is the falling downtrend. If the mean of the midpoint tends to be that lower price, not even saying a new low necessarily, but just going back to a more normal price after a strong rally. And that logic would be true, again, in the S&P and the other indices. Same logic here, that there was a risk, of course, looking back, but the same classification of risk and positions. This is the risk area that the market just keeps going, doesn't stop. and the reward was for a downside. A reward means there's additional probability and profit in that direction on short-term trades, swing trades, and anything else in hedges and the like. Well, that same classification is right now, where the risk is for additional multiple days in a row to the upside, and the reward is just for a pullback, 3900, maybe 360. Of course, we'll cross that bridge later in August or into September. But before we get there, crude oil continues to be at a very important crossroads at that 90 or 88 per barrel level. It as well has had an uptrend and has, price at least, has the potential to play a rally or bounce from that. Same logic will go into positioning with crude oil, that the reward is for a potential bounce. Again, thinking of a sustained move, the risk is going to be to the downside. A little bit opposite in crude oil. The bond market is seeing what we're looking at, what I'm looking at, in terms of risk reward. So again, even though the big picture, we're spending a lot of time on the big picture because that is a guiding force, news, headlines, event. These are bigger picture, bigger duration type trades and bigger conversations to have as short-term or swing or even duration traders with premium, volatility spreads or vertical spreads, whatever positions you might have. But keep in mind that the markets, even when they go down, don't tend to go down straight on with a single move. They still tend to, as I call, wiggle and squiggle, but those give us short sell opportunities when the market rallies. And that's what I like to classify as the risk pathway is for additional upside action, and the reward pathway is down. Same logic for equity futures. Moving beyond that, we'll talk about gold quickly, that it had its trading range. Let's actually go back to a weekly perspective for the gold prices to see that, and the same conversation. Now that we're here, the reward pathway is for a bounce and return back to the mean or the middle, and the risk was for a breakout, risk reward. And that has achieved its midpoint, and that will be a neutral play to that 1800 per ounce level. Silver was also in play in today's session, which is a little weaker than gold, but didn't have its bounce. Similar logic, down, a persistent move down does give way to a swing up, and we are looking for a potential move back down, possibly in silver. Let's switch to our perspective on ETFs. Just looking at a few of them, the financial sector is itself in a this much, but no more. And that will be just about the 35.50 level for the shares of financial companies. And on to the technology sector, XLK, that level, just pinpointing its bigger picture play, 150 per share, and that's going to be similar to the Nasdaq. And we'll look at XLY, which is consumer discretionary. And that is about the 170 level, this much, and no more. Again, thinking the same logic about the market can swing to the upside, swing to the upside, swing to the upside, but it more than not, after a sustained or multiple days in one direction, this case to the upside, does have a little better probability to take a reversal and swing back down. That again is a reward, down, risk, and hedges and protection to the upside. And outside of that, we'll take a look at some of the key stocks. Might not be names you are familiar with, but if you are in need of some long or bullish exposure or bullish hedging in the portfolio or just in some of the swing trades, these could be some of the candidates, and this is just today's session. So we are back to looking at stocks that are making new 52-week highs. And it's been a while since we've seen these. We've seen a lot of stocks make new 52-week lows, but in today's session, none of the S&P stocks did make new 52-week lows. But not major market cap did make highs, and we'll pinpoint a few of these names sorted by market cap. So in the big picture, we see Cigna, which is CI, and again, the thought process for me is if a stock or market is trending in a direction, the better plays would be in the direction of the trend and those would be bullish type opportunities, bullish swing trades, when the market pulls back to support level or to a swing low. That is the logic, at least, for trade setups. That's Cigna, which is making a new 52-week high, and Southern Company, also a wide range stock, utility company, but nonetheless is up there at a new 52-week high. That's our weekly chart on the right, daily chart on the left. McKesson, MCK, is a stock that is just on a tear to the upside, and that may be some bullish opportunities on pullbacks, retracements to rising trend lines, linear regression, or in my case, moving averages. And a few others will look at General Mills, generally thought as a safety stock. That would be cereals and consumer staple, XLP. That would be part of that group. That's General Mills, GIS. And we'll just list a few others as we come to the conclusion of tonight's video, just naming a few names that in the S&P 500 did make 52-week highs. And you can scan that in your own time frame, in your own thinkorswim of load the scan query. We'll go to public, new 52-week highs or new 52-week lows. And in the big picture, we will be watching these areas very closely throughout Friday and into next week. As always, be careful and safe. This is Corey Roseland with tonight's Theo video update for August the 11th, 2022.